We're going now back to Washington, finally, where the Commodity Futures Trading Commission has just wrapped up its hearing on energy markets, and Bloomberg's Peter Cook is now standing by with CFTC Commissioner Gary Gensler. Peter, we're happy to have you.
All right, thanks very much. I am here with Chairman Gensler of the Commodity Futures Trading Commission, wrapping up this public hearing on possible regulatory changes to look at energy markets going forward. First of all, again, thank you for the time. As you begin these
good to be with you again, Peter.
As you begin these public hearings, you examine the possibility of imposing position limits on energy traders, futures traders going forward. First time you would have ever have done that. Do you begin with the idea that excessive speculation has been a problem? There's evidence of that in the marketplace right now?
Well, the Commodity Futures Trading Commission is mandated by Congress and has been for decades to protect against the burdens, as you say, of excessive speculation. So that's what we're investigating in these hearings. But I thought it was very significant today that we heard from the exchanges, and for the first time they've really said that they could support setting position limits so we can protect against these burdens that could come from large, concentrated traders.
But there's been this great debate, and you've heard it over the course of the last few years. You've heard it in the course of your congressional testimony the last few months. Speculators, have they played too great a role in the energy markets? Again, have you reached your own conclusion? Is there evidence yet to really point to that?
Well, I do think that we, as a nation, lived through an asset bubble. We had asset bubbles in the housing markets, and we had asset bubbles in the commodities markets, including the energy markets. They peaked at $147 a barrel last year. But I think what we're really focused on now is how do we make sure that our markets are free of not only fraud and manipulation, but free of the excesses that can come from very concentrated economic actors in these marketplaces.
You've proposed a couple of ideas here. Again, specific position limits. You heard from some of the exchanges who expressed some ideas on that, some pushback on some of the ideas. The CME group said, for example, they'd like to set those position limits. Who should set these position limits if indeed they've come?
Well, I think it's very significant, again, that they're supportive of setting the position limits. I do believe that we'll continue this debate, but the CFTC has clear authority to do it, and I think we're in the best position to do it because there's actually competing exchanges. Secondly, we are put in place to protect the markets and the public. They also have shareholders, and they have a profit motivation as well. So I think if we can look at aggregate markets, best set by the CFTC.
What's going to happen to all these over-the-counter markets? There's a debate going on in Congress right now whether or not regulatory authority should extend to those over-the-counter markets. If you set these position limits in place in these exchanges, in these futures markets right now, isn't everything going to move over the counter?
I think there's a very real consensus in Congress and in the financial community even that we need to move forward with reform and regulating the over-the-counter derivatives market. As part of that, we also need to have an ability to set aggregate position limits on the over-the-counter derivatives marketplace. So I agree with our witnesses who recommended that.
What about the argument you're going to hear that if you start curtailing the financial investors, these index funds, these swaps dealers, the big Wall Street firms, if you start curtailing their ability to play in these markets, you're going to hurt liquidity in the long run?
I actually think of it the other way. I think that we can actually enhance liquidity and enhance the integrity of the markets. You can debate whether a market that has one very large concentrated actor is more liquid or not, but in fact, I believe that if you have a diversity of speculators, diversity of actors in a marketplace, that we could enhance liquidity.
What do you say to people who look back at last September when the CFTC came out and essentially said, listen, we don't see clear evidence of problems here? Have you all concluded something else in a very short amount of time?
Our job as a commission is to set these position limits. Congress set this out in 1936, and it says we shall set them. And it's to prevent or diminish burdens that could come in the future, and it's burdens that can come in stormy times as well as clear times. So we're looking forward to how we best promote the markets.
All right, Chairman Gensler, thank you for the time. I know it's been a long day for you. We appreciate it very much.
Thank you very much, Peter.
Here on Bloomberg. That's Chairman Gary Gensler, the Commodity Futures Trading Commission. Another public hearing tomorrow, the latest in this series on this issue. Send it back to you in New York.
Okay, Gensler says the over-the-counter markets need to be regulated. The interview was worth the wait, thanks to Peter Cook.